Hi, good afternoon, and welcome to the Holborn Assets, Succession Planning and Business Continuity. We welcome you here. This webinar will basically take us through exactly the importance of succession planning and the importance of bespoke tailoring to get this ideal for you. I'm delighted to say I'm joined here by Richard Williams, who's the Senior Vice President of the Continental Group. Brief introduction for myself here, being at Holborn Assets. I've been an advisor, senior associate here for a long time now with Holborn Assets as a financial advisor. We have a long-established company. We have offices around the world. We have offices in Dubai, where it all started from, and then we have Malaysia. We have Spain. We have Cyprus, which is the office that I now belong to. And we also have Vietnam as well as Spain, which I've just mentioned. Today really is talking about, like I say, the succession planning, the importance of all aspects of financial planning. Everyone needs financial planning. And the most important thing is, with Holborn Assets, we have a duty of care and we take pride in the client servicing and the holistic financial planning that we do for all of our clients. So tailor-making solutions to your needs, which is very, very important. I'll be happy to answer any questions for you and answers at the end, along with Richard, who I now pass over to the floor to Richard to explain fully and detailed of exactly the importance of succession planning for your business and for key partnerships.
Graham, thank you very much. Good afternoon, everyone. It's a privilege speaking to you, albeit remotely. I'm talking to you here from Bath, in the heart of the West Country over in the UK. And I'm with the Continental Group and have been there for a number of years, which adds into my 34 years in this industry. And I must say I'm thoroughly enjoying the protection side of our business. And at Continental, we have offices all over the world, including in Dubai and in Mauritius and in Switzerland. So we're a multi-country company with a 26-year history of looking after the needs and wants both of our own clients, but also perhaps more appropriate here with our global partners around the world. And we hold a very, very, very strong relationship with our partner Holborn and support their teams all over the world. Only last week I did a presentation to their team in the Far East at a whopping 3:30 a.m. But it's all part of the deal. So I'm delighted to be here, specifically today, talking about protection and for succession planning for businesses. So as Graham mentioned, there will be follow-up to today. So today is really positioning the concept apart from anything else. It's not a big sales pitch. It's talking about the concept behind why would I create a succession planning solution for my business? And perhaps, not that it's a long-winded COVID bleat, perhaps we'd be mindful of what's going on in the world just now, because what we're seeing certainly just now is there's more interest than ever before in this type of protection, particularly for people looking to sort of ring fence their families and in this case, their businesses. So now you can see the title there, Succession Planning and Business Continuity. Don't worry, this won't be death by PowerPoint. It'll be a very upbeat, very pacey chat through the concept of what is involved. And we can all relate, I suppose, to the importance of keeping people alive, but also dealing with the catastrophe if something were to happen to them. And in a sweet nutshell, what we're looking at here is offloading the responsibility of a big payout or a financial catastrophe from an individual or a business to a major insurance company, and in doing so alleviate that business and perhaps their family of the financial strain at a time where it's pretty hard because they're dealing with the emotional strain of losing a key person. So creating a bespoke succession planning solution, because whatever business you're in, the show must go on, and no one leaves this world alive, unfortunately, including you and me. We're all going to pass away at some time in the future. We just don't know when. So we create a solution. So what I mean by when I say the show must go on, well, the business has to keep running. without maybe the key directors or the owners. We have to keep the creditors at bay. If there are lending arrangements in place, we have to make sure that the lenders are able to be paid off, perhaps. We have to be ensure that the customers stay on board, that they stay loyal. People can get quite fickle when there's a big change in the world. And we've obviously got to replace that person who sadly has passed away. But at the same time, what we can do is build a valuable asset to grow the strength of the company. And in doing so, we can maintain the position of the company and grow it, even though a key player has passed away. So it's going to be growing and protecting. And suddenly it just became a bit interesting. Life insurance is boring. There are two key questions in life insurance that always amuse me. One is, have you got life insurance? And the second question is, did your husband have life insurance before he died? Now, if the answer to those is no, there is something that needs addressing. And it's a moral obligation, whether it's family, whether it's business, to put something in place that will alleviate the financial problems. And lastly, creating some form of a retirement income for the key people. There are different types of life insurance, and here, universal life, how does it differ? So essentially, who is it for? Why would I use it versus other types of insurance? And why is it different from other insurance that you may be familiar with? And in this case, this is for people who are high net worth individuals, who are business owners, and people with illiquid assets, including stuff like art, property, cars, watches, wine. And we're focusing today on business owners specifically. And Graham will be more than happy to organize other sessions where we can look at other areas as well. These are our triggers. So we're looking at the bottom right there, key man or key person protection, where you're ring fencing a key individual with protection so that the show can go on. And also maintaining that business continuity, which is absolutely vital. Otherwise, if you don't do that, the business will fail when it didn't need to happen. So let's talk about why is it different. Now, you're probably familiar with term insurance. I've got term insurance. I think it's a wonderful concept. Absolutely wonderful. I have it for my mortgage. Sadly, I'm not mortgage free yet, but I will be probably in 10 years. And so term insurance is a little bit like car insurance insofar as you pay a premium, and if you die within a certain period, or if you crash your car within a certain period, you get a payout. Now, that could pay for your car, and if it's term insurance, it will pay for your life cover. So it will dish out a nice chunk of money, but that's kind of it. There's no after. And next year, you get another premium reminder, and the year after that, and the year after that. And with term insurance, it's a very inexpensive way to get insurance. Many people overlook the importance of insurance full stop. Also, many people associate term insurance, dare I say it, with cheap insurance. And that is not the case. And I hope today I'll demonstrate that to you. Now, when we did a dummy run of this presentation, we had the numbers at the back. And Graham and a couple of his colleagues said, let's bring the numbers to the front. So here we go. I'm going to show you some examples, and the minimum we look at is $1 million US. So here we have a gentleman, a resident in an A+ country, so that could be Spain, could be Dubai. All the different countries have different ratings, but in this case, we're looking at an A+ country, 45-year-old, annual premiums. That means they're paying from their bank account directly to the insurance company, not to Holborn, not to Continental, directly to the insurance company on an annual basis. And we're using a growth rate here of 5.9. I'll talk about that in a bit more detail a bit later on. If we look first of all at the term insurance, a 20-year term, that means if this chap would have cover until he's 65. Now, do you know when you're going to die? I don't really want to know, actually. But if someone has this, they're covered until they're 65. And in that case, it's a low premium because they're young, they don't smoke. It's just under $4,000 a year. So we know over 20 years that individual is going to be shelling out, give or take $80,000, so $78,000. And it will cover them for 20 years. Conversely, if we look at universal life, first thing you'll notice is the premium is higher. So why is that? Well, that doesn't last for 20 years. It lasts for the rest of their life. So it's what we call WOL, or whole of life. And that means the client has surety that it will pay out when they die further down the future. So if it was the 21st year, for example, with term insurance, they wouldn't get anything. If it was in the 21st year here, they'd get $1 million. But here's the thing. Although your capital outlay here is significantly more, you have an accumulating value. Now, in this case with term insurance, you don't get anything back, like your car insurance, like we said. It's got a place, but here you get a value. And we're going to talk about how are we arriving at that value, because there's an element going towards protection and there's an element going towards investment. And I use investment very loosely because we're not choosing any funds. I should say Holborn aren't choosing any funds. You don't have to choose any funds. There are no funds being managed. It's following an index. And in this case, the example I'm using is following the success of the S&P 500. 65-year-old index, average 7.2%. I'm plucking these numbers because it's all I talk about all day. So we're quoting 5.9, a very conservative 5.9. So in this case, you can see here, you had no value after 20 years. The plan is finished. Client is 65 years now. He's much older, so harder to insure. Here, we've paid out $247,000 in premium. Nothing further to pay ever again. $1 million if the client dies. But we have an accumulating pot that has already gone past where the amount of premiums the client paid in. So in that respect, going back to our preconceived ideas that term insurance is cheap, hang on a sec, we just got our money back and we're still insured. And in this case, at 100, the value for the client would be $1 million. So hang on a sec, that just got interesting, because now we have a living policy that pays out if the client dies, but if they don't die, it will build up to $1 million, and that's at a conservative growth rate of 5.9%. Along the way, the client may say, I could do with taking a bit of money out. I'll take out $100,000 to pay for school fees or something like that. That's fine. So it kind of morphs from being a protection plan to a protection plan with value that can be accessed at a later stage. If we look at the other example here, so you could say we'll do a term insurance policy to age 99. So that means the business is fully covered no matter what until the client's 99, by which time he probably won't be around, so it will have paid out $1 million. Yes, sure, the premium goes up slightly to $7,747, but he's got the cover until he's 99. So you'd expect to pay a little bit more. But look at the capital outlay, $418,000, and there's no accumulating value at all. It serves a purpose, but all that money has disappeared. But if we look at the similar setup here with whole of life, $9,500, so a slightly higher premium, but we have an accumulating pot. And therefore, the total capital outlay is $523,000, but when the client is 100, he's accumulated $1 million there. So that in essence captures what I'm talking to you about today. So how do we do that? How do we go from a point where we've got zero value at the end of it to a point where we've got $1 million? Because they look kind of similar, right? So what happens to the premiums for the client, for the company? Well, what's happening behind the scenes in very simple terms is you've got an accumulating cash pot here, accumulating bucket of money. The premiums come from the company or from the client and go into this pot, and the profit earnings, the growth or the interest, goes in from the right-hand side, from which there's a drip, drip, drip into a glass, which is paying the underside cost of insurance along the way. It's a very simple structure, and what happens is, as long as there's enough accumulated account value there, the client has flexibility to stop, start, increase, decrease their premiums. So at no point is someone going to come along and say, sorry, it's run out of money, because there are underlying guarantees in place. Let's go to insurance plans where there are fund choices to be made. So instead of following an index, you choose specific funds. Sounds good, sounds very romantic. I'll get into an Indian developing market, a technology fund, a balance fund. It's great. It's great when it's going well. But when it's not going well, and we know about volatility when markets go up and down, so you take the punches with the highs, and over time you'll make money. But when the markets go down with a protection plan and the insurance company review it, they may say, hang on a sec, we haven't got enough money in our bucket to be able to maintain this drip cost of insurance. Therefore, we need more money, or we're going to reduce the level of cover with the plan. That cannot happen here. Why? Because you're not choosing funds. You're following an index, and the features of these plans is they go up when the markets go up, but when the markets go down, they stand still. They don't go up, but they don't go down. So you're not wasting the next 12 months trying to get yourself out of the well to the point you were in before the downturn in the market. Now, what does that do? It takes away choices for you. It takes away rebalancing for Graham and his colleagues, and it takes away a lot of negative volatility in the market, all the while still maintaining the protection in place. I like safety. I'm a bit of a conservative fellow, and as such, we only use the biggest and the best. And the quotes today that I'm showing you are produced by a company called Manulife. Now, we work with two key companies, Manulife and Sun Life, both superb, the biggest in their game. And in these cases, these are offshore plans. They're based out of the Bermudan offshore operation of the mothership, which is based in Canada. But don't take my word for it or Graham's word for it. Look at the ratings. So if we look at the S&P rating, independent body that analyzes the strength and weight of a company, you can see right across the board, these are very, very big, strong, well-established companies that were here before we were all alive and that will outlive us. That's kind of important for a protection plan. Trusts. Always a stumbling block for me when I got into this industry. It sounded more complicated than it actually is. A trust is essentially a way to speed up the process of delivering an asset to a business or a family or a company by avoiding probate, legitimately avoiding probate. Probate is really a legal process that has to take place, for example, if someone only has a will. Whereas if they have a trust, they've already put those measures into place. And with these plans, they are all written in trust because the best insurance plan is the one that pays out the most as quickly and when you need it the most, which is generally when someone dies and there's a financial catastrophe. I've got friends who have died intestate without a will, and their families have lost their homes and they haven't seen any money for a couple of years because bank accounts were in single names. It doesn't have to be like that. Now with a trust, very simply what's happening here is the client, they are paying their money into a trust, and within that they hold the letter of wishes. So for example, could be nominating my wife, could be nominating my children, could be nominating a bank, because I can use this policy to go and get leverage, to borrow money, to grow my business. And the banks say, well, hang on a sec, we need a $5 million policy to be established. I've already got one. And you just go to your trust, you change the letter of wishes, you make the bank the beneficiary of that policy. You did it while you were young, obviously, because then it's much cheaper to do it because you're more fit. And the trust then pays the premiums into the insurance company. Very appropriately colored in red when the client, not if, but when the client dies, the proceeds are paid into the trust. They will look at the letter of wishes from the client whilst living and say, right, this is what they asked us to do. And the assets are delivered very quickly. And typically a claim with the wind in your sails would be around 30 days versus quite a lot more time if you didn't have it. And it's free. What is needed for underwriting? So we get to a point where a client or a company say, we need to insure our 3 directors. We need to insure our principals, whatever that may be. What is required? And very straightforward, it's a case of analyzing the health, wealth, and lifestyle of that individual or that business so that it can be positioned correctly to the insurance company. They will analyze it from an underwriting perspective, and they can make an offer. So, for example, they will look for all of the supporting information. So they'll be doing health underwriting and monetary underwriting, financial underwriting, to make sure, as you can see on the left-hand side there, I won't read it word for word, on the left-hand side there, that this level of cover is suitable for a client. Now, I've seen cases go through for cover of $100 million, very big, but I've seen a lot go through for $1 million and $2 million. And we have cases going through every day for that level. Those level of cases are out there. So personal information, as you would expect, details of the client's identity, where they live, what they do, how much they earn. So we're looking at assets there, so we can work out what is their net asset value, what is their net worth after all the debts and such like, so that it can be evaluated that this is appropriate for them. And then, no surprise, looking for reference letters as well from third parties, whether it's their bank or their auditor, and generally with a company, it's their auditor's accounts, so we can see how that fits in to the setup there. It won't come as a surprise to you that a medical is required, what is involved in a medical, and these are the sort of things where we really add value to our sort of partners at Holborn, because we tell them what to do ahead of a medical. Don't go out for a run the day before. Don't drink 10 cups of coffee before you go to the doctor. Arrive early so you're not stressed and sweating. These things make a massive difference. I mean, huge difference in terms of the premium, because if you get a great medical, your premium is going to be a lot lower, significantly lower. But the medical requirements are very straightforward. It's a case of looking at the bloods, at urine, analyzing that for various tests in laboratories. Resting ECG. What is an ECG? It's an echocardiogram. It's ascertaining that A, client has a heart, and B, that it works well. And then a chest x-ray and a general examination. And we have partner doctors and clinic facilities all over the world, and that's all covered. We take care of those associated costs there. An attending physician statement is essentially a letter from the client's doctor saying, yep, John came to see me last year. He had a very dodgy knee. We treated it with painkillers and a bit of stuff. Or so-and-so has been an asthmatic for a number of years. They take their proper Ventolin. So again, it's capturing health, wealth, and lifestyle to get the best deal. And then we help our agents and our partners through the form filling process, which I won't bore you with. Post underwriting, the insurance company will come forward and say, good news, we would like to make an offer. Good news, your client is healthier than expected, so we're going to offer a reduced premium, and we can now proceed into the second stage of paperwork, which is things like your application form and your trust wording and bits and pieces like that. Now, as partners of Holborn, we have a fantastic private client team of about 6 or 7 people who have years of experience in this stuff, and they help and guide and nurture and probably point out errors along the way, so that when we get to the insurance company, we deliver the best service to the insurance company. So what next? What do you need to do? If you think that you like the idea of this, first things first is liaise with Graham. He's got a fantastic team behind him. And then it's a case of discussing your needs and how these could fit into your world. It may be they're not appropriate for your world. It may be they are. And if they're not, he'll find something else. And if they are, we can help him and support him accordingly. So it's a case of sitting down with your consultant, with your advisor, and talking through various steps and opportunities. And on the right is the menu of life, as I call it. These are the things we need to be able to create a very nice bespoke quote for that particular person. So details of their name, their date of birth, male or female. Would you believe that makes a difference? Females are generally less expensive to insure because of one thing, it's mortality rates. They live longer. An existing client, that would be for Holborn, and how long you've been known to them, where you live. The thing I love about this insurance, it doesn't discriminate between anyone's race, color, or creed at all. It's based purely on where they live. My last business trip was in February last year. Seems a long time ago now. And that was to Lagos. Now, there aren't many people that can offer this level of cover in places like Lagos. We're doing cases in Angola, in Zimbabwe. I've had 2 calls already to Vietnam and Thailand today. So this really is a very widespread and global product or proposal for businesses around the world. And quite rightly, Holborn have captured it and said, we can support our clients here because we are a multi-country organization ourselves. Does the client smoke? If they do, it's going to be more expensive, but we've got solutions there as well. If they're planning to give up smoking, we have incentives there as well that will bring the premium down so they've got time to give up. They get tested again. Good, they gave up. Premiums come down even further. So just because someone is a smoker, they shouldn't discount doing something like this. Remember, the minimum level of cover is $1 million. And of course, any pre-existing conditions, it's nice to know about them. And then lastly, how you wish to fund that. So funding can be done annually. It can be done for a short period. It can even be done with a single premium or even premium financing. We have all the links in place ourselves and with international private banks around the world, so we can feed into all of the requirements of our partners at Holborn. And that, my friends, is as much as I was going to talk to you about today. I don't want the subject of life insurance, you could say, is quite boring, but everyone likes what it does, don't they? First thing when you hear someone's passed away, did they have life insurance? And it can mean the difference between a financial catastrophe for a family, but the end of a business, and more importantly, for the business to survive. So I'm very happy to hand back to Graham now. I hope you find that 27 minutes helpful and informative. And if I can answer any questions, I will. And if there are any I can't answer, I'll get answers for you. Graham, back to you. I think you're on mute. You're on mute. Yeah.
Richard, thank you very much indeed for that presentation. Very, very informative. And it really homes home how important bespoke succession planning really is. Like I say, everybody needs financial planning, but to have that in place for that term or that whole of life insurance is so, so important for any family or any family business to have that succession planning keep rolling forward. I'm extremely open to questions for anybody, or if anybody wants to get in contact with me, you can do so from my details. I was Graham Martin Tyrrell on LinkedIn. I'll be happy to answer any email questions that you may have, or if anybody's got any more questions now at all, I'll be happy to answer them for you. Okay. No questions as of yet. Okay. So with that in mind, I'm happy to literally pass it over to you, Richard, if you have any further questions for me at all.
No, I think we've covered most things. I think I applaud the way Holborn are dealing with this particular subject, because it's not just all about investment. And Graham, it seems to me that the direction of the company is going in a number of ways, providing real value to your clients.
Absolutely.
And in particular, protection seems to be very, very important right now, particularly as we are in the midst, thankfully heading towards the end of, hopefully, of this global pandemic.
And it's amazing the amount of people that don't actually have cover or have not looked into it. I mean, nobody wakes up in the morning ideally and think, oh yes, I must get some life cover today. It's education and planning, and this is what we pride ourselves on at Holborn as financial advisors here, is giving the tailor-made approach to no clients are exactly the same. There's no off-the-shelf solution for a client, and this is what we pride ourselves on, is giving that tailor-made aspect of sitting down with the client, finding exactly how their needs have progressed and how they need the help that we can offer them. And by having a no obligation informal chat, first of all, for those details, I've had clients for 23 years that I've been in as a financial advisor. I still have clients to this day who I now deal with their children. feeling from there. It's just really, in essence, of looking after clients from day one, and that's really important. And that's just why we do what we do. And like I say, at Holborn, we pride ourselves on that.
It's brilliant. And I think the other thing I would say, that's, I know it's a bit cliche, with investments, I think clients can be very standoffish or slightly on guard because they are sold investments, they are sold things. Whereas I think with protection, they want to buy it. If you have if you're living in a 1-bedroom flat and you suddenly have a family of 3, you want to get a bigger place to live in. You want tiles on the roof to protect, to guard, to look after your family. And protection is exactly the same, whether you're a business, whether you're a standalone family. You need to have that moral obligation firmly in place to look after your family if something were to happen to you, just so they can survive, so they can put bread on the table. And so if it's a business, so it can function. You may have employees that rely on a key individual. So I applaud what you're doing, and I must say it's a privilege and a pleasure to be able to talk to you and your people tuning in today about the subject. So thank you very much for that.
Absolutely, and thank you for joining us. Thank you. Okay, well, with that then, if there's no further questions at all at this stage, like I said, please feel free to contact me on there, and I'll be glad to answer any questions that you may have. And also to book an appointment in to actually sit down with myself for, like I said, an obligation conversation to see how we can help you moving forward. Like I say, everybody needs financial planning, and to do that in a constructive way, I'll be glad to help. Okay, thank you very much. Thank you.
Thanks, Graham. Thanks, everyone. Take care.
Okay, bye.
Bye.